So probably the best stock that I've found that yields over a 10% yield. The best one to me, for sure, over that amount for an individual stock is Icon Enterprises. And this is a Seeking Alpha article that I found, and I'll go ahead and link it. But I do believe you're going to have to probably create a free account to actually view the article. So if you don't have an account, you'll have to probably make one to view it. But anyway, so just wanted to do a quick summary over this. So basically, they talk about whether it's worth it or not. And pretty much, I think it's worth at least a small investment in. I certainly wouldn't put all my eggs in one basket, but getting some shares of this, in my opinion, is certainly worth getting at least some. So the first thing I would say for anybody that's going to get this stock, if you would, you'll want to have somebody that knows what they're doing with their taxes, because you'll have to end up filling out a K-1 tax form, and I believe you got to have a minimum dollar amount in there to have to fill that out. I don't know what it is. It varies state to state, country to country. So I'm no tax guy, but you'll have to have somebody that knows what they're doing with the K-1 tax forms, and they can be sort of confusing. I've certainly read about it, but I still don't know a ton about it because I don't do my own taxes. I have somebody do it. So you either really better know what you're doing with your taxes or have a professional do them. So if you're not going to have a professional, I wouldn't recommend doing this. It's just probably not worth the headaches. But to me, the dividend distribution alone, to me, makes it certainly worth at least buying some shares in. So the other thing to know is that Carl Icahn and his associates own like 90+% of this stock. So the public's only owning like somewhere around 10%. So basically, the next part they'll tell you is on the on the dividend yield. Investors looking at a 14% distribution yield are right to take pause and not jump in. Anything over 10% should be scrutinized and skeptical, which I agree. So at the same time, they have only increased the distribution over the same time frame. The latest coming to an annualized $8 that is paid quarterly. So basically, for every share of this you own, you're going to get $8 annually, $2 paid per quarter. So one of the reasons for that structure is because it's a MLP. So therefore, they do pay quarterly. But what they said was in here that we still have the problem of negative cash flow. That means they aren't covering the payout to investors. At the same time, they have a lot of cash on the balance sheet, and that was mentioned in their latest call. An analyst asked, can you just tell us how the dividend is funded through time? And also, how do you want us to think about dividend sustainability? Is it economic sensitivities, investment return, blah, blah, blah? Well, we've got plenty of cash on the books, so we're funding the dividend is not necessarily an issue for us whatsoever. We do like our current capital allocation policy, as we just approved the $2 dividend for the quarter, which has been consistent with past practices, and I think we intend on continuing that, at least at this point in time, unless things change. So basically, they're telling you, just like anything, things could change at any given time. But like I said, right now that dividend is pretty fantastic. The company last reported $2.194 billion in cash equivalents at the end of June 30th of this year, so just a couple of months ago. They also reported 251 million outstanding units. Based on a $2 quarterly distribution, that would work out to around 502 million per quarter that they'd be paying out. So I mean, that's a lot. That would be the amount roughly paid out every quarter. Looking at the numbers, it looked like they'd have at least a year plus covered with just cash, which sounds good, but with limited cash coming in, one would probably assume it's only a matter of time before that's gone, and then they would cut it. However, this is where the 90% plus that Carl Icahn and affiliates hold comes in. That's because they're mostly reinvesting in new units rather than taking cash. So that means that the $502 million that they would roughly be needed isn't even close to what they're actually paying out in cash. And this was also brought up in that conference. They called attention specifically to the fact that they don't believe they'd be paying out $2 a quarter if it wasn't for this, which I agree. Yeah, they'd be running out of money quickly if they're paying out 500+ million per quarter. So, yes, concerning that dividend, Carl Icahn owns most of the stock in the company, and you've been given the option of taking the stock instead of cash. So I don't think you'd be paying out as much as $2 of every share that you have out as Carl Icahn in the past, as far as for the taking stock instead of cash on the dividend. So basically, yeah, the way they're wording that, he's taking stock, not cash. David Willits confirmed that Carl was taking stock instead of cash. And looks like it said right here, the exception of a particular quarter in the last year, looks like he took some cash. So it probably is low on cash, I'm sure. Needed some, right? So we, at this point in time, as indicated today, that's been the practice. We intend to believe that this will continue being the practice unless, like I said, that they always end it unless things change. So you like I said, you can't count on anything. But I would say if they want to keep that going, there's a good chance that they will. And they didn't change anything in 2020, so that's a good sign. Of course, most investors knew this to be the case. This becomes quite evident when we take a look at outstanding units for IEP, etc., 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 etc. What else? Distribution reduction. Yeah, and then it's right here. They're just saying how his son is set to take the reins over at some point. He's back now on the board of directors. Yeah, and then it just says the risk here again seem minimal. Worth mentioning, Brett Icahn presumably wouldn't want to disrupt what was already put into place. I mean, that seems to make sense to me. And yeah, in a nutshell, I mean, for the most part, that's pretty much it. The author of this article seems to still think and say that that the price still seems overvalued when you compare it to its historical price. And I mean, again, that's just a thing you don't know. You really don't know. Is the price going to continue going up? Is it going to go down? I mean, who the heck knows? I mean, there's all sorts of predictions out there, but the way I see it, somewhere between 50 and 60 bucks, I think it's a decent price at that point. If it gets, honestly much higher than like say 65, then that yield of course goes down. And then it's kind of a, if you look at the stock history over time, it's, got a lot of validity. So, I mean, just a few years back, I mean, it was over $100 a share. So it just seems like at this price point, it's worth, like I said, a small risk to get some of those distributions. Yeah, and then basically down here they got the conclusion. This article is a dive into the intriguing Icahn Enterprise to see if it was a worthy investment. I think at the end of the day, the most significant risk isn't the distribution. Instead, from my perspective, it's that it is trading at such a premium at this time. Though a distribution cut is always a risk, I don't see that taking place under the current conditions. Ultimately, taking a smaller position in IEP could be worth an investor's time. Exactly what I think too. I fully agree with that. Small position. I wouldn't be taking out a second mortgage to invest in this name though either. Not at the current price anyway. Yeah, fully agree. Well, I wouldn't ever take out a second mortgage for any investments. That would be pretty crazy. Although, if you get super lucky, it could pay off, but that would be quite the risk. But anyway, yeah, that's pretty much it for the article. And this is a very recent article. So again, I'll link it. So if anybody wants to actually go through and read it. But yeah, like I said, I don't own a ton of it. I think I literally have 5 shares of this thing. So I'm just a very small amount, but I think I'm going to continue getting some more here and there. As long as, like I said, it's between that 50-60 range, I think it's good. If it gets much higher than a few bucks over 60, probably just scale back on it because I just, the more the yield goes down, the less I'm really interested in it because I don't really know if this thing's going to continue growing in, stock price over time. I don't know if that's going to change. I mean, it's really hard to say. I'm much more interested in it for the dividend yield than I am the price itself growing to sell at a later date. So again, yeah, this one's pretty good. I guess I haven't really seen it talked about a whole lot. I know there's a few other videos out there on YouTube I've seen that have covered it, but it just doesn't seem like it's covered a lot. So in conclusion, to me, worth a small risk putting some out there. Uh, but again, I still probably am more comfortable in the long haul with the income stuff, probably more with, like RYLD, QYLD, XYLD. Those, I still think those, to me, probably are safer bets. But this one, with the yield being even higher, certainly worth something. So anyway, I'll link everything there below.